Yesterday was another rough day with a lot of selling going on leading up to today's unemployment data and Jerome Powell's Fed speech that's coming up at 12 o'clock. There's a lot of things going on in the stock market. It is manipulated like it always has been. I'm going to explain to you guys and break it down what's going on. We're going to listen to some things Tom Lee had to say, which further proves exactly what I just said, and that everything is manipulated. They're trying to shake you out of your stocks. Let's take a listen to what Tom Lee had to say. Don't worry about subscribing, liking, or looking for the coaching and Discord link. We'll get to that in just a little bit. But stick around, because in this video, I'm also going to explain to you guys stocks that are likely to make millionaires going forward because of their good valuation and such cheap price right now with the sell-offs. Let's take a listen to Tom Lee.
It does take us to our talk of the tape, where stocks are likely to go from here. Let's bring in our experts. Adam Parker, he's the founder and CEO of Trivariate Research. Tom Lee is the managing partner and head of research for FundStrat. Both are CNBC contributors. We're lucky to have you both together today. Welcome, guys. All right, Adam, just give me your assessment as you watch what is a increasingly headline-driven market.
Yeah, I mean, look, as you know, we think it's going to be choppy. I'm still optimistic that on the other side of this, we could get back toward, revenue growth and beneficiaries on the AI front with productivity and margin. So the call we've had is choppy here in the first few months. Then once the management teams understand what the policy backdrop is, they can, deploy productively capital. So I choppy first half, and then we probably get a resumption of pretty good growth.
Tom, you've tried to remain pretty optimistic through all of this. Are you still?
Yeah, I am optimistic. I can understand why investors are sitting on their hands. They don't really know how severe these tariffs are going to be, how long they are, but now we're seeing a big price correction, a decline in sentiment, and then something like today, we got a bad ADP jobs report, and the market's actually up, so we're actually rising on bad news, which is a good sign that a lot of bad news is priced in.
But do you agree with Adam that the first half of the year is likely to be a little more choppy, and that you can get through some of these issues here regarding trade, and then you look down the road to tax policy and think that, okay, well, that's going to usher in a better back half of the year?
In fact, what's just happened in the last
tax policy, excuse me.
Yeah, what happened in the last 6 weeks is essentially a bear market that has swept through sentiment and positioning, right? Because if you look at hedge fund positioning, it's gone almost neutral, and a huge correction in momentum. So I think it's very possible that March, April, May could actually be like one of these huge rally months where we're rallying 10, 15%.
Even in March. As we're sitting here, we're going to be driven, obviously, by more tariff headlines. We do have to consider the fact that earnings could take a hit. Do we need to reassess that?
Look, I think if stagflation were a stock, it's up off the low. That's why the market has been choppy. People are worried about, a slowing economy, Walmart, consumer confidence, retail sales looking a little light. At the same time, they're worried about, higher prices. I don't think that's ultimately what's going to happen.
So you'd be short that stock?
I would be. I just don't know. Maybe I think Tom is short it today, and I maybe would say it's I maybe would be short it in a couple months. But I think we're in the same mindset that we'll get on the other side of this at some point, probably in the second quarter. I just think it's hard to get through it until we really understand. If you're the CEO of a company that's a big company and you've got facilities and customers in Canada and Mexico and China, et cetera, I just think you're a little bit, I like his phrase, sitting on your hands a little till you understand a little bit more about how to most productively deploy capital. I think that usually takes probably through April earnings and guidance, and then I'd probably kind of be more optimistic that we have a certain path. So we're in the close enough for, government work, if that's a thing.
Well, you might be losing.
Yeah, exactly. We might get dosed.
I don't know if that's so bullish for you.
I'll take you too. I'll take you too.
It's one thing for CEOs to be a little skittish, be a little more cautious. That's what they get paid to do. Investors often have to place their bets before something takes place. Is this a buy, this unsettled market that we've witnessed recently?
Yes, in my mind, we put out a piece yesterday just talking about the 10 best days that happen every year. Last year, for instance, the 10 best days added up to 21 percentage points of the S&P. X those 10 days, the market was only up 4%. So, you don't get 20% years because it's good through the year. It's just the 10 best days. I think the setup for a 10 best day is near because if the economy's near stall speed, I think people realize the Trump put does come back because otherwise it has to unwind all this austerity. And if the job market's soft, the Fed put comes back into play because the Fed doesn't want to play with stall speed. And I think that's what is going to be the positive catalyst in the next couple of weeks. And on top of that, we already know stocks will bottom before bad news peaks. And so if we're seeing the market not fade on bad news, that means we're already priced in a lot of things that would scare us.
So you heard what Tom Lee had to say. I'm going to break this down for you guys because it's very important to understand. He explained that markets going up and having very good years of 15 to 20% or more really all are accounted for by the best 10 days, meaning that most of the gains in a year are seen during 10 days that are the best 10 days of the year, and that he thinks one is near right now because we're at a bottom. And basically what he's saying is that because stocks are starting to rally somewhat or consolidate on bad news, that's typically when you see a bottom. He also explains that when bad news comes out and stocks don't go down, it's because we've already priced that fear and that sentiment into the current price, which I believe it's pretty much happened for the most part as well, but there could be some more room for a downturn if the markets don't like what they hear today, which is the unemployment data as well as Jerome Powell speaking and the Fed's deciding whether or not it's time to cut interest rates, which is ultimately what the stock market really wants and needs. So the reason I say the markets are being manipulated right now, and it's all manipulation, is because of two very key points that Tom Lee stated, which I've explained before. He said that if the stock market looks like it's at stall speed due to the tariffs and the issues going on with different countries and the tariff talk and these executive orders, then the Trump put would come back into play. And long story short, the Trump put is basically Trump doing anything necessary to appease and relieve the stock market of its anxiety and stress to make it go back up. Essentially, long story short. But right now he's doing things that aren't necessarily beneficial for the stock market. Essentially admitting manipulation is happening. So what Tom Lee's basically saying is that he's doing things that are rough on the market, but then if the market gets too rough, he'll then do things that are good for the market. So very simple, doing things that tank the market and then doing things that will bring the market back up. Sounds like manipulation to me. And just so coincidentally, the tariffs are now paused yet again. So it seems to me like all of this is a manipulation so big money, $7 trillion in the sidelines, can get into the stock market. That's what it sounds like to me, and that's pretty much what it is. He also explains that if the jobs report and unemployment data is not good, that we're looking at stall speed in the market yet again, and that would bring back the Fed put, which would be the Feds being more dovish and less hawkish and giving us interest rate cuts, which all of this data seems to be coming together at the last minute. Trump doing things that are making the stock market bearish, and then the Trump talking about tariffs making the market go down. But if it goes down too much, a Trump put comes into play and you'll do things to make the market come back up. All the while, the market is doing poorly, and we've got unemployment data and Jerome Powell speaking today, which could in turn put the Fed put back in order. And this essentially is all manipulation. And the reason I say it's manipulation is because that's exactly what I've been telling you they're going to do. Tank the market, get the money in, and then the market goes back up. So if Jerome Powell announces an interest rate cut today, even if it's several months down the road, lots of money is coming over and the stock market is going to go up. So a lot of this seems like manipulation to me, with the Trump put, the Fed put, tariffs being paused, executive orders. So a lot of this seems weird to me. Tariff talk, they're going into play, then they're paused, then they're going into play, then they're paused. We might get interest rate cuts, Trump put, Fed put, all in the same 2-week window. It's a lot of manipulation going on, but it's a buying opportunity for us. And I've explained this to you guys before. I explain this and I teach this to my students. I have a specific doctor in my Discord that I've been working with over the past 2 weeks, and he has made a lot of money just trading differently because of the circumstances in the market. So if you are looking to make safe, consistent, passive income, even in a down market or a consolidating market, I would love to help you. You guys can join my Discord training course and one-on-one coaching at any time at investorcorey.com. Links in the information box below. You guys can see the profits my students are making on the screen. I would love to help you guys out. Don't let fear and greed and psychological emotions tear you down. The market is not going anywhere. We have several pullbacks a year of 5%. This has not been 5%. The S&P 500 is still $20 above where it was before August major pullback or major tanking episode that happened. So we're still in an uptrend and we are having seller exhaustion right now. So I'd love to see you guys. I'd love to help you. You guys can sign up at any time, investorcorey.com. Links in the information box below. You guys can head over to the website, click on training, watch the video, and you'll be able to book a call with my team and I so that I can help you grow your portfolio. So I want to explain to you guys some stocks that I believe that have a high probability if you get in now and you dollar cost average and you accumulate shares over time in your portfolio that could truly generate and make wealthy people. And now is the time to do it. If you have a smaller portfolio, SoFi and New Holdings are very good in the financial sector. SoundHound is also good for the AI and voice recognition sector. And then, of course, we have Palantir, which is a little bit more expensive, but it's the perfect opportunity. It's in the low 80s, the high 70s. It's went up a little bit, but it's still a very good buying opportunity. It's at $80 right now. And I think this is a very good time to get into Palantir, especially if interest rate cuts are announced. A couple other stocks that I've really looked into and I like, Grab, as well as Google now being at the price it's at because they're into quantum computing as well as AI. Google is also a very strong stock. Now, it probably won't have as much growth as Palantir if Palantir lives up to its full potential, or SoFi for that matter, but it is still sitting in a position with a lot of growth in the future. There's another stock that I'm really looking at that I've never really been a fan of until recently, and things have turned around, which could be a very, very strong stock going forward, and that's Celsius Holdings. Celsius Holdings was not doing very well for the past couple of years, and I was not a fan of the stock. They were in such a downtrend. There was so much loss with all the shareholders. The stock just kept going down. However, their cash flow doubled on the previous earnings from the year-over-year quarter last year. Such significant growth considering investors paid 3 or 4 times more than the current price, and now the stock is actually turning around. The company is making huge strides, and they're also seeing huge results. This would be the time to get into Celsius Holdings, especially after the drop over the previous few weeks. I also like Robinhood, Hims, and Nebius. These are some other stocks that are likely to do well, have big and huge potential, but every stock has its risk, and the stock market is inherently risky, so never invest more than 10 to 15% of your portfolio into any one stock, sector, or strategy. If you guys want to see my top 5 stocks to buy for March, I want to see your comment in the comment box below. And like I said, if you guys want to join my Discord training course and one-on-one coaching and my boot camps, which will take you from zero to hero and help you guys understand the stock market better, especially how to hedge your portfolio when the market is going down and make money like my students are right now, even in a down market. I would love to help you guys. Can head over to investorcorey.com, click on training, watch the video, book a call with my team and I so that I can help you grow your portfolio. We're looking forward to the Fed meeting today, and if he says that interest rate cuts are not on the horizon to be cut, this is going to be a little bit of an issue. But like Tom Lee said, we've kind of already priced all this in, all the fear and all of the negative sentiment. So I feel seller exhaustion has already happened, and the stock market has already had some slight rises, even on bad news over the last couple of days, more specifically on Friday, which I talked about in the last video. So I think, in my opinion, there is more room for a downside, but it's hard to say how much considering there's so much downside has already been realized. I believe we're at a bottom, and it really all comes down to jobless claims, unemployment data today, as well as the Fed speaking. And I think we're going to get an announcement for rate cuts today, possibly. And I do feel like unemployment will be steady and that we may even see a slight improvement over the previous month, but it is possible that it could get slightly worse, but I don't see it getting too bad. And as long as it stays relatively the same or even a slight modest improvement, that'll be good. But this data today will determine how we move going forward. But I believe all will be okay because, let's face it, in time, the stock market will eventually recover and go up. Time in the market beats timing the market. Hope you guys have a great day today, and we'll see you on the next video. Take care of yourselves, fam.